Shailendra, talk to us at Narnolia. What's your philosophy? How do you approach markets? You've been around for over 2 decades and running your portfolio for almost 10 years now.
Okay, yeah. So I'll answer that in two parts. What kind of a company we buy and what is the process we follow for it, the company we buy, we call it growth in value. Now, when I'm using the word growth in value, it simply can relate as, a company where the ROE is going up, the ROC is going up, and the free cash flow is improving. The other part of the meal is, apart from growth in value, the rising ROE, ROC is the linearity. So we do not go and buy a company where this change in ROE is happening very fast in a quarter. We like those companies where the delta is in a smooth, so multi-quarter, gradual improvement in margins, gradual improvement in working capital position, resulting into higher cash flow. So because the problem is something which moves very fast. So you remember last 2 years back, a lot of material company, because of some company stopping production in China. So suddenly the pricing power came to these Indian corporate and margin expanded. But look at the way the fall came. Because these kind of expansion can contract also with equal speed. So there are two legs of what to buy. Buying company where ROE is rising, ROC is rising. And the other part is this rise is gradual in nature and not very fast. In terms of the process I was talking about, there are 5 different elements to the process of ours. One leg is about the business. So every company today addresses a particular need of the market. So understanding, in that market segment, what are the changes happening? What are the profitable pocket to make money from this market opportunity? So basically understanding full about the business. This is one part of it. The other part is purely management. Every management got a resources in command. So how they are funding their balance sheet, how they are applying those money in different businesses of their own, how they are managing their HR.
Sure.
How they are managing, their marketing things, how they are positioning their product, how they are pricing it, how they are managing the supply chain. So understanding all about the business and the management. And the other parts are what are the financial moat in their books of account, which ensures a higher margin for the business. So,
right.
And third is trend in financials. And last, the meal is basically in terms of, the kind of valuation multiple it is trading. Do you have sufficient margin of safety in terms of what kind of a multiple you want to assign to it? And do you have enough profit on the table to buy in that stock? So 5 processes, purely fundamental bottom-up processes, along with what we like in terms of stock characteristics.
Shailendra, in fact, I was just looking at your performance. Your PMS has been operating for almost 8 years now. And there's a very meaningful alpha that your PMS has managed to create versus the benchmark.
Right.
Good 7-8% versus the benchmark. Talk to us about what led to that kind of a outperformance coming in, what some of your calls which went right or some of the processes which helped you even despite volatility into the market.
Yes, there are two parts of it. We were very clear about sticking to our discipline. So just because an idea is coming up there, which will give you a 3 months profit, 1 year profit, we never diverted from our set philosophy of growth in value and doing detailed fundamental research. So we never in a hurry to buy a stock. We take our sweet time to do research, get to a conviction level before we put our money onto the work. So discipline is the key. Second part is we are very careful about how we are constructing our portfolio. Gone are the days where stock picking was enough for you to make money. Look at 1990 to 2000 or 2000 to 2010. The market used to come to 10, 12 P every year once. And that used to be, if you are you have done your homework properly, you always used to make a lot of money, buying at those attractive valuation. Last 10 years, market has not gone below 13 times, 12 times earning. So in this circumstances, what kind of economic exposure your portfolio is exposed to is very, very important. So where you are stationed, large cap, mid cap, multi cap, which sector, which theme, not only theme and sector, what kind of a fundamental characteristic you are buying into. High growth, high valuation, high quality. So these attributes, which was not so important 10 years back, has become very, very important. And we have kept on understanding the changing contour of the market and kept on, being disciplinedly doing the stock picking and constructing the weightages in the portfolio in a very, very judicious manner.
Shailendra, talk to us about what at Narnolia Research is something which you like right now. I mean, looking at the environment, we all know China is creating havoc across the world, but you are more long-term oriented firm. Talk to us about your overweights and underweights right now.
Okay, so last year we were overwritten financials. So look at financials, the growth for financials is very, very structural. All the retail banks, the NPA crisis because of which the valuation multiple came down, peaked in FY18. So FY18, your NNPA was 6.5%. FY19 it fell to 3.5%. From FY18 6.5 to 3.5 in FY19. Right now also it has gone a little up, but 4.2. So that's one area where we were overweight, and we are continue to be largely overweight. For last 8-9 months, we have added a lot of consumer discretionary stocks, primarily into retail. What we are thinking, for next 5-10 years, this is a very secular story. The organized retail will keep on, doing good amount of business expansion, financial expansion, good profit, etc. And the other part is this business is a very difficult business. Very few promoters who started the retailing business got their calculation right in terms of a store level IRR. So couple of those who have survived long enough now in the market, where the management pedigree is proven that they have the right working capital management, because in the retail, how you manage your inventory is the critical, because the EBITDA margin is very low in retail business. So very strong management who have survived for last 10 years are there. There are 3-4 names, and we own most of those in our portfolio. So that's retail is one area where we're very bullish for the next 3-4 years.